Welcome and thanks for joining us at EMII.com. I'm Caitlin Sisney with your Capital Markets Report. Today is Tuesday, April 15th, 2008. Delta Airlines and Northwest Airlines revived merger talks, prompting the Bank of Debt both companies to rise half a point, reports Credit Investment News. 2 weeks ago, three smaller airline companies closed due to rising fuel costs and a negative economic outlook for the airline industry. Majestic Research airline analyst Matthew Jacobs said, quote, "I think if one of these larger airline mergers is consummated, we may be seeing more airlines and bigger ones at that go down the same path. No one wants to be left without a dance partner." Staying with capital markets news, the UK owner of all Bar One pubs, Mitchells and Butlers Plc, may sell stake to private equity firms and use the money to buy chains managed by larger rival Punch Taverns, reports Bloomberg News. Discussions with the PE firms and Punch, which said it's mulling its own joint bid for Mitchells, are at early stages and may not lead to a deal, Mitchells and Butlers said today. It didn't name the firms which proposed buying a minority stake at a material premium to the current share price. People familiar with the matter said last week that firms such as Blackstone Group contacted MNB. And in capital markets news in Asia, Korean Southern Power breathed life into the moribund Asian debt capital markets and looked set to price its $300 million five-year bond, reports EuroWeek. KOSPO, as the state-linked generator is better known, was the first Asian insurer to announce a dollar bond for 10 weeks since sister entity Korea Midland Power priced a $300 million five-year deal on February 1st. ABN AMRO, Citigroup, and Deutsche Bank are led managing KOSPO's transaction, which was being marketed to U.S. investors in New York yesterday. And in other Asian capital market news, Asian satellite services operator ProtoStar has surmounted the turbulence in the credit markets to secure a $245 million financing for its second satellite to service the Asian direct-to-home market, reports Project Finance. The new debt facility consisted of a $200 million three-term loan with Credit Suisse serving as sole buck runner and joint lead arranger, and Jefferies & Company acting as a joint lead arranger. The debt was distributed to a syndicate of lenders from Asia, Europe, and the U.S. and involved the refinancing of an outstanding bridge facility and a $45 million equity financing. And that rounds out today's Capital Markets Report. Thanks for joining us on EMII.com. For more details on these stories and much more, click on our Capital Markets channel online and read the latest developments.